Hello again, fellow BeachBum traders. Thank you again for joining us for this week's weekly game plan for December 13th through December 17th. Strap on your seatbelts as everyone expects the Fed to punch the accelerator on the tapering and Fed interest rate hikes this Wednesday and Thursday of this week. So let's get prepared. Let's get our seatbelts in place, get comfortable, and see how we can benefit and profit in our trading for this week from these events. So again, let's start out with a recap of the email from Jim Cramer's CNBC Investing Club that came out on Friday the 10th, December 10th, titled "What Are We Watching Next Week?" including the Fed and Eli Lilly update. I've got the browser version of that email up here. I'll put the link in the description box below. Again, you can subscribe to Jim Cramer's CNBC Investing Club. It's all free. We find it very useful. And again, he does a real good, quick recap that we'll review, and then we'll add our commentary. We can see the S&P rebounded. In fact, I believe it hit a new all-time high on Friday. They shrugged off the variant, etc. So we didn't see a lot of seesaw action this week, a little bit, and we'll talk more about what we can expect in the future going forward. We saw, Jerome Powell finally came out and said, well, inflation is not really transitory. Let's not call it transitory anymore. It's like, yeah, we've been saying that for a while, right? So they're finally coming around and saying, yeah, the inflation is not going to be transitory, and now we expect an acceleration of tapering and tightening interest rate hikes next week when the FOMC meeting is on Wednesday. So again, we'll talk about the economic calendar, what time those comes out, and how we're going to prepare for that. We saw, there was a bit of a flight to safety on Thursday. Consumer discretionary Thursday and Friday. Consumer discretionary utilities were the laggards. Tech and energy were leading. One of the things, I wasn't able to attend his live meeting, but you can see the 2022 outlook, and we're going to see more of this coming out, outlooks for 2022. But from Jim Cramer's standpoint, what they're focusing on is, companies that produce products, are profitable, and trade at reasonable multiples. In other words, more value, right? So again, we'll talk more about what stocks, what companies fit those criteria as we go forward. So some other points, gold's kind of been hovering around 1800. Oil rebounded, went into the low 70s. Hopefully y'all made some money with us. We got into USOI, which is the ETN, pays dividends based on oil, and it's up a little bit. Then we got CPI data. We got initial jobless claims, which were below estimates, and then we got CPI data at the end of the week, which again just says what we've been saying for a while, which is inflation is hot, and it's a 39 to 40 year high yearly inflation, and again we've been saying that for a while, and hopefully positioning appropriately, and based on all this data, we expect the Fed to accelerate their rate of hiking and tapering. So again, we see everything's indicating inflation is hot. Now it was expected to be hot, and when the CPI number, a lot of people were bracing for the CPI number, but the market pretty much expected it to be hot, and there was very little reaction. In fact, the VIX retrace down below 20. It's currently sitting at 1869, and we'll look at the futures. But the market reacted positively because it had been expecting this hot inflation. There's some earnings trickling in the end of this week, but we're pretty much out of this earnings season. And then we could see the economics calendar. The big event is the FOMC meeting on Wednesday, and the announcement of what's the Fed, how much is the Fed going to accelerate their tapering, when now do they expect to finish tapering, when do we expect the first rate hikes, and how many rate hikes do people expect in the upcoming year. So we'll dig into those details a little bit, but hopefully these CNBC Investing Club recaps help. You can again read this in more detail for yourself. I'll put the link in the description box below. Okay, just a quick follow-up and commentary on the economic data events from last week. We saw Tuesday again, productivity numbers were worse than expected. On Thursday, jobless claims data was kind of mixed, and then on Friday we got the CPI data, which was hotter than expected, a 39-year high. We also got consumer sentiment was a little bit improved, a little bit better than expected, and then we also got that oil rig counts were up slightly. So there's an indication that there's some increasing oil supply, which should put downward pressure on oil. And in this discussion, there was also a mention that there may be an oil surplus next year. As U.S. oil production kind of quietly increases, there's talk about potential of Iran entering, and we have OPEC is increasing their supply at a steady rate at this point. So again, some of the main event for next week is the Fed meeting on Wednesday, and we can see at 2 p.m. is the critical time when they make their decision and announce their interest rate decision, and we expect to hear what the plan is for accelerating tapering and interest rate hikes on Wednesday afternoon. So we want to be prepared for that. Again, we'll talk about this in more detail. My opinion, it would be great if the VIX would dip down to 16 or below. I'd love to get long the VIX in preparation for this FOMC announcement. I don't know if that's going to happen. Again, we do have a buy out for the SVXY if the VIX happens to spike on this decision. So also Friday is Quad Witching, which is an options expiration date. And we have, the weekly, monthly options and futures all expiring on this Friday. So I'm going to put the link to the options expiration calendar in the description box below, so you can refer to that on an ongoing basis. And also, here's an article about, what is quadruple witching? What is this quad witching date? What does that mean? And again, you can read this in more detail, but this happens for 4 times a year. It's the third Friday of March, June, September, and December. And they call it quad witching because the options and the futures all expire on the same day, and it's once a quarter, and heavy trading volume. So again, we expect heavy trading volume, the potential for increased volume, increased volatility. So again, we've got 2 potential volatility events this week. We've got the Fed meeting on Wednesday, then we've got quad witching on Friday. So again, we could get some increased volatility, whether that moves the markets up and down or just increases volume and volatility. We'll have to wait and see, but we want to be prepared for those volatility events on Wednesday and Friday. So again, you can read in more detail what quad witching means in an options expiration. Again, as we've discussed before around these OPEX dates, expect a tug of war around strike prices, critical strike prices where there's large open interest. Those with open calls are going to want to pull the price above their strike price, and those who sold those calls are going to want to pull the price below those strike price. So again, that bodes for an increased volatility and tug of war around these stocks with high open interest. So watch for that, particularly on your current position. So I hope that helps. And again, I'll put a description to or a link to this Quadruple Witching Investopedia article in the description box below, and you can refer to it in more detail. I hope this helps. Okay, let's take a quick look at where we ended up on Friday the 10th. I'm in the homepage of FinViz. You can find our affiliate link to FinViz in the description box below. We can see all the indices closed a little positive. I believe the S&P hit a new all-time high, and we'll look at that in the SPY in a second. We can see technology was the winner from Friday, but as we're going to see in Webull as well, there was a lot of decliners, and there was some discussion that now tech is like a third of the S&P weighting. So something to consider when we see the S&P going up right now. That means tech. So, and the NASDAQ is also tech heavy. So we can see some of the current news. Faster tapering, inflation, as we've discussed, higher inflation near 40-year high. We can see oil ended up. Nat gas actually popped up, bounced up like we thought, and we made some money on oil, but our timing probably wasn't the best. Hopefully y'all did better on that oil trade. We see gold's kind of hovering around 1800, and the treasuries, again, it kind of acted strange on that CPI data. Initially the yields went down, we got stopped out of our TTT position, and then the yield bounced back up a bit. So hopefully y'all were able to also profit from that TTT trade, and if you didn't get bounced out, then hopefully you're doing better. So great. Let's take a quick look at the indices. We'll look at the SPY, and then again we could see it's very close to an all-time high, but it hasn't quite bounced off the top of its channel. So that would indicate potential upside if it doesn't roll over on some event. So it's bouncing in this channel. So we expect it to, eventually touch the upper trend line, bounce out of the bottom trend line, and continue along those lines is our expectation. But I don't see a strong indication that it's time to short. If it does hit that upper trend line at an all-time high and maybe even breaks out a little bit, then we might be looking at shorting the SPY using SPXU. Q is very similar, although it's more in the middle of its trend line. So again, it's following that channel. Dow, very similar, although it is a little more extended. I would say a little more at risk, but it's still not at the upper part of its trend line. It's quite a bit above its average. So again, a little more downside risk in the Dow right now. IWM or the Russell. The Russell's been very volatile on these seesaw days, and you can see it was heavily down. I think we're going to see in Webull, when we look at it, I think there's some significant bets shorting the Russell, but we'll take a look at that when we get to Webull. And the VIX. So we could see it retraced heavily. It spiked up and then has been retracing. The low is in this 1615 area. I'm not sure if it's going to retrace all the way down there before we get the Fed meeting or not. We'll see. So now let's look at the futures and then the state of the markets, and then we'll strategize how we want to play this for this week of the 13th through the 17th. Okay, now I'm on the Futures tab in FinViz. Again, you can find our affiliate link to FinViz in the description box below. We can see the Dow is up, but not at its top. Similarly, the S&P is closer to its top, but it hasn't really broken out yet. NASDAQ is below its peak a little bit more. We can see the Russell really rolled over, and it looks like it may have further downside to come. We can see the VIX is retracing. It looks like it might be breaking down further. We can see oil is kind of hovering, indecisive, whether it's going to roll over and head back down or try to pop back up. Again, we've got a long position in USOI. We do have a stop in place, so if it does roll over, we'll get stopped out, take our profit, which is nice at this point. If it pushes up, we'll make considerably more money. Nat gas, we went long on oil when it did this I thought it was an irrational drop, and then it climbed back up. We did get stopped out. We are going to try to re-enter if we get a dip. We'll re-enter nat gas with oil because we expect. I think this drop was on a prediction that December was going to be warmer than average, but there are other predictions in El Nino, etc., that this winter is going to be colder than expected. So we do expect nat gas to pop back up, and we're just looking for an opportunity to re-enter there. Gold's been kind of flat around 1800. We are looking for an opportunity. If it dips just a little bit further, we're going to go long gold with GLDI, which again is a monthly paying Credit Suisse ETN on gold. We're still long silver with SLVO. If you're not already long silver, you might want to consider it. Gold and silver have some nice upside. Those ETNs pay on monthly dividends, so you get paid while you wait. And we can see the behavior of the bonds. It's been pretty erratic. The prices dropped. The yields went up for a little while, and then the past couple days the prices went up a little bit, pushing the yields down, which again is kind of strange because we know the Fed's going to accelerate their tapering, which means they're going to decrease their buying, decrease demand in bonds, and that should push the yield up along with increased inflation, which again those bonds need to increase their yield to be attractive, combating a 2% or more inflation. So, and we can see the dollar's been kind of flat, kind of seesawing back and forth, and so that's caused some seesaw action in commodities. So now we'll look at the markets data in Webull and strategize from there. Okay, now I'm in the Markets tab of the online browser version of Webull. If you don't already have a copy of Webull, you can find our affiliate link to Webull in the description box below. You can get 2 or more free stocks. I also hear they're running a promotion to give you free crypto of your choice if you sign up for Webull right now. So if you don't already have Webull, now might be the time. We love Webull. And again, you can find our affiliate link in the description box below. We also have a much more detailed video on how to use this market screen in general, so I'm not going to go into a lot of detail here. You can find a link to that video in the description box below. So very quickly, I want to just flip over to the global view of all the global markets. We can kind of see where they ended up. Asia, Europe ended up red. Most of the US markets ended up green. Again, I'm starting to use this global tab in Webull much more for pre-market after hours trading. We can see how the other global markets are trading when the US market is closed. So if we look at the US market, we know they all ended up green, but we can see there were more decliners than advancers. So even though the indices ended up, many more company stocks declined. So that can be misleading. There's stuff under the covers that is eroding the overall market. So we can also see inflows. The NYSE was pretty steady, but there was a lot of outflow out of the NASDAQ, which again, kind of misleading. The big techs, your Apples, Microsofts, Amazons, did quite well, but we see there's a lot of outflow out of the NASDAQ. So again, smaller caps, etc., may be declining, even though the index says it's advancing. So if we quickly look at after hours to see if we see any trends from Friday, we see some biotech, some pharmaceuticals were positive. If we look at the losers from after hours, again, mixture of biotech, some China, some medical. Again, you can see the earnings calendar coming up for Monday. It should be less going forward. And then we can see the best performing industries. If we flip to the All tab, we can see all of them. And again, so construction materials was somewhat positive, consumer goods somewhat positive. We look at ETFs. So up on the Dow, up on the S&P, up TQQQ is up on the NASDAQ, QQQ, so up on the NASDAQ, shorting the VIX, and again, shorting the Russell, heavily shorting the Russell. So a lot of downward pressure on the Russell, as we kind of suspected. Industries. We see tech, oil and gas were the leaders. Utilities were leading energy. So again, tech and energy is the strong theme. Materials, got lithium was hot on Friday, although it's been running pretty high. We see tech, consumer defensive some, energy. And financial services, so increasing interest rates. That's people keep predicting financials is going to go up due to increasing interest rates, but it's not consistent at this point. Oil, nat gas, and then bonds. We'll see high yield. Okay, so given all of this information, now let's talk about some trends, some themes, etc., some strategies that hopefully all of this will help you select the stocks to put on your watch list for next week, as we will do in part 2. So we will talk about strategies, themes, and plans, and hopefully then we'll use this information to select our stocks for our watch list for part 2 of this week's weekly game plan. Okay, let's quickly talk about some current trends, themes we see, and how we can strategize to profit and benefit from those in our trading. Supply chain issues continue. You'll see pictures of all the container ships sitting outside of the LA ports. It's still a problem, but we still have trucker shortages. Again, this supply chain issues continue to impact companies. Again, any companies that are vulnerable to supply chain issues, please be careful with, because this is going to continue. Their future earnings are going to be hit negatively. Also, we're hearing about further shutdowns in Asia, China, Vietnam, which those are the suppliers. So that bodes for future supply chain issues. Now the manufacturers are not producing, so there's going to be a delay, and then we have potentials for gluts, people over ordering to compensate. Again, future backups at the ports, etc. The supply chain is going to continue to be lumpy, right? We're going to have over demand, low supply, and then oversupplies, gluts, because people overorder because of what happened. Then we're going to get oversupply. They're going to have to discount to get rid of inventory. It's going to be very lumpy for some period of time to come. So please take that into consideration, the companies that you're buying, that they're not vulnerable to this lumpy supply chain issues. We talked about tax loss selling and profit taking, which is all end of year accounting, particularly for large fund managers, hedge fund managers, etc., and institutions. There's discussion that this should wrap up the week before Christmas. However, we may get a large glut of institutional tax loss selling all at once, or profit taking. They may be waiting for an opportunity, so you might see a large volume of selling hit all at once in the next week or so. So please be aware of that. If you see, if it's a company at a loss for this year, you see a lot of volume coming in, it's going to really put downward pressure. Again, anything that's way up this year is vulnerable to companies taking their profits. Again, this is all to make their books look good, reduce their tax exposure for the end of the year. That should all wrap up, hopefully, by the week before Christmas. So let's also talk about the Santa Rally. You'll hear discussion of the Santa Claus Rally. We're going to talk about this in more detail next week. What is the Santa Claus Rally? It's the last week of December through the first 2 trading days in January. I've got this link up to this article in Investopedia that describes the Santa Claus Rally in more detail. We will review this article in more detail next week, but I just wanted to give you the reference to it and talk about preparations. So what the expectation is okay, we have downward pressure due to tax loss selling and profit taking, and then the expectation is for a Santa Claus Rally the last week of December. So this tends to be a very good opportunity to buy the bottoms, is these stocks that are heavily beaten down over the next week or so. If they are good companies, not broken companies, just a broken stock, and they're of value, this is a great opportunity to fulfill your shopping list in preparation for Christmas, right? So hopefully we've got your Christmas list ready, and when you see the opportunity and these guys value stocks bottom and are preparing to turn up into the Santa Claus Rally, that's your opportunity to scoop them up. So it's important this week to have your shopping list ready. Be prepared to buy those value stocks that hit bottom due to this downward pressure, and hopefully ride them up through the Santa Claus Rally into the end of December and the first part of next year. So again, we'll talk about Santa Claus Rally more next week, but we want you to, this week is the week to prepare and buy those things that are going to benefit from the Santa Claus Rally the following week. Finally, be ready for news of further variance. If we start to hear additional variance hit the news, be prepared for the seesaw action. Please see our list of lockdown and reopening plays in the comments of the last couple weeks of game plan videos. We've also posted on our Facebook group. We expect more variance. There's no reason not to expect there won't be more variance, more seesaws of lockdown reopening reactions. So once it hits the news, expect a reaction. Also, as a bonus for viewing these weekly trading game plan videos, we've got a couple other videos that we produced and not yet premiered, not yet published yet. One's on how to prepare for trading while traveling, and another is how to use the Gartner hype cycle for your stock trading. We talked about that in a previous weekly game plan a little bit. This is a much more detailed video about how to use the hype cycle for your benefit going forward. So I'll put the links to these in the description box and in potentially in the comments so that you can view them. They're unlisted right now. We'll be premiering them as we have the opportunity to do so. So we hope all this information helps you go select the stocks for your shopping list for this week, for your watch list, as we will be doing, and then please come back and join us for part 2 of this weekly game plan for December 13th through the 17th, and we'll tell you what stocks we are adding or removing from our watch list for this week, and our price targets, strategies for trading those stocks for this upcoming week. So again, we hope this all helps. Please let us know in the comments below. Feedback on this information. Was it helpful to you? How can we improve, etc.? And if you're not already subscribed, we hope you will choose to do so. If you like this type of information and it's valuable to you, please smash the like button. Help the YouTube algorithm share this with additional of your fellow traders out there, and please share this with your friends and fellow traders. We appreciate your time. Thank you for watching, and we'll talk to you again soon. We hope that you like our weekly game plan for the trading week for this week. Thank you for watching the video to the end. If you found this helpful, we hope that you will choose to subscribe to our BeachBum Trading YouTube channel, and please click the bell icon below to automatically be notified whenever we publish a new video. Please also share this with your fellow traders and friends via the share button included below. And let us know if you found our weekly game plans helpful in the comments included below. And let us know how we can improve. What would you like to see more, less of, etc. Thank you again for watching. Good luck and have a great trading week.